Good morning. It's Monday. It's rainy, and the market usually goes down during the rain. I have one word for the market: ugly, ugly. Unfortunately, ugly. Here we're looking at the daily. Here's a long move down, a drawback, and bang, that's a bear flag. And what are we doing right now today? We're setting up another bear flag. Maybe it tags tomorrow. The momentum is supportive of it. The momentum is down and ugly. Nothing turning around. This was a huge drop, man. A huge drop from 4,600. That's a 500-point drop. Okay. Okay, it's going to take a lot to turn that baby around. There's nothing signaling a turnaround. What's worse is we look at the weekly, and here's a weekly bear flag. Ugly. Can I say it enough? I don't think I can, man. I hope everybody's short this market right now. When is it going to stop? So that's it. We're consolidating right now. We're off the low. This is our support. We are bearish pending the break of that daily flag, breaking that resistance right there. We could bounce around in this range between, I guess, today's high and the 4118 low. We'll probably do a little retrace. I mean, this could be the retrace after that move down. You know, some people are going to close out the shorts and shit like that. And that could be the move. I don't know what forced it down. I'm kind of thinking that a little bit of news that NATO scrambled some jets Monday at 10 o'clock. I think that got everything really reeling. Yeah, there's the 9 o'clock bar. Bink, bink. And then that's the happenings after the 9 o'clock bar. Bar that closed at 9 o'clock, and then it turned around. Could very well be that, you know, and the talking heads on the news shows are missing it. Because nothing's really changed, man. I mean, you know, we're looking at a recession, but I don't believe we're going to hit a recession. And honestly, I think everything's going to pop once one thing gives. And things are expensive, no doubt, but if you look around, they're slowing down. Like car sales are the prices are slowing down. They're at a point where people just won't buy the cars anymore, which is a good sign. And you're seeing that in little places. It's just nobody's talking about it because the corporations are talking about last quarter and what they did last quarter and things of that nature. They're not talking about the real time. So you're not going to see the inflection in the data first. You're going to see it in your life. So look around and see, okay, I mean, shit's expensive, but is it still creeping up, creeping up, creeping up? Or is it staying the same and, you know, it's just kind of peaking out? And that's what you're looking for. You're looking for that peak out. Because I think once things turn around, the everything's going to ease. You know, we'll get a little ease in the in inventory, and we'll get easing in pricing, and profit margins will probably stay at or around where they are, and people will start getting comfortable and spend, and that's what they want to do. There's no way that the Fed's going to bring prices back down to where they were last summer, or the summer prior. You know, all they're going to be able to do is stop inflation, so the shit's going to stay expensive, and everybody's going to grow accustomed to it. So that's it, man. That's what we're looking for. That's what we're watching for. On a positive note, this is a crazy divergence, right? Price action is moving down, momentum is moving up. That's a divergence, but there's nothing here to trigger a turnaround. Right now, for that divergence to be triggered, we'd have to break this high of of the a high of 4303.50. So that's what we're keeping our eye out. Anyway, everybody, calm, cool, collective. Stay in control. Get your meditation in, and good luck trading.